Hey guys, today I want to point out what's going on in small cap stocks, which have actually been leading the market to the downside. In other words, they've been giving us relative weakness relative to what's going on in, say, large cap stocks like the S&P 500. So let me just quickly show you before we get too deep into this. So the market rover actually gave us a sell signal here in early September, and since then the Russell 2000 has slipped quite badly. But that's what the market rover does. It gives us these buy and sell signals. And so what I wanted to show you here on this chart more specifically is what's going on in the bigger picture in the Russell 2000. And if you look at this, let me get the camera right, there's always an issue. What you can see is that the Russell 2000 has been treading higher in a very well-defined channel here over time, right? You can see that pretty clearly. Well, we reached the upper end of that trend again in early September, and that's when the dashboard here gave us that sell signal. Oops, that's not on the camera, is it? At this point right here, and then you can see that strong move lower we've had since. Well, what's happening right now is that we think there's more downside, and we think more downside here is probably closer to the 160, 161 area. If you look at this a little bit more closely and you zoom in, you can see that this area that we're targeting, which is again the lower end of this trend, as you can see, right, the long-term trends, you can see that that area also actually coincides with what used to be horizontal resistance, right, which may now become support. So it's about another 2% or so to the downside, and there's actually more pockets in the market that are getting weaker. I'm going to reserve that for our members today, but if you were to look into the market rover, there's a bunch of things that happened yesterday, some changes that really, to me, sort of signal that we're going to have more downside. And by the way, this is not an immediate term call. We could absolutely bounce today, but I think through the lens of a few days, maybe a few weeks, there looks to be more downside here in the Russell 2000 and a weakness. And if you want to see this in another way, one thing you can do is you can make it a relative chart. So what we're going to do is we're going to make a relative chart and show you guys the relative weakness. So we'll take the IWM ETF, which represents the Russell 2000. And we divide it by the S&P 500. And you can see this relative weakness. This is now the Russell 2000 compared to the S&P 500. See how it's relatively weak? And that relative weakness actually started to creep in the second half of June, right? As the S&P continued to go higher, but the Russell 2000 ultimately sort of really fell off a cliff here in the past few years. Now, again, this may be immediate term oversold, but I do think if you look at the Russell through the lens of a few days, maybe a few weeks or so, that there looks to be a well-defined downside target towards 160, 161, and that's what we're looking at here. And again, this is what the market rover does. It gives you these signals based upon a top-down process that we have, and I'll show you guys more about that going forward. But anyway, folks, short and sweet today. Just wanted to make sure you see that. Have a great trading day in the markets, and I'll talk to you guys tomorrow.